I invested in one item that increased by price in 4 times in just 6 months.
Counter-Strike, CSGo, as you said, is a game from my childhood as well, right? We grew up
Yeah.
playing that.
The inflation right now, in even though the government it says it's around 6.8 to 7%, the real number in cities is like 10%.
Oh, you know what? I just got a 10 lakh bonus. I want to take this entire thing and put it in gold.
If you know of the country of Venezuela, a significant
Yeah.
portion of the economy depends on this game because they trade the in-game currency for cash.
For a lot of young people that might not have as much time and bandwidth, what would you suggest they do?
Even my generation would to invest maybe 50% of their portfolio in mutual funds right now, and the other balance 50% can be a mix of.
Hi everyone, welcome to another episode of the Cashvisory podcast. I'm Utkarsh, the co-founder, and today we are going to have one of our most interesting conversations because we're speaking to Abhilek, who's a young mechanical engineer that's right now working with Mercedes-Benz. But interestingly, he's someone that got started with his investing journey when he was just 19. He's not just invested in stocks and mutual funds, but his portfolio has gone way beyond that, right? And very interesting things that we're going to be learning from him today. So let's jump right into it. Hi Abhilek, welcome, very warm welcome to Cashvisory's podcast. I'm so excited for today's conversation because I'm someone who is really passionate about investing, as you can probably tell. But it's always great to meet young people who've started their investment journey early, right? And this is very personal to me because I started investing very late, according to me. I started investing when I was about 25, and I wish
Mhm.
someone would have told me about it in school or college. And you're someone that got into this topic when you were just 19. You actually made your first investment then. Super impressive to me. Tell me how you got started. Tell me what got you interested, especially given the fact that you were actually a mechanical engineer. And I'm also a mechanical engineer, so high five on that. But over to you.
Yeah. Utkarsh, thank you so much for having me. I've been looking forward to this call for a long time. So to answer your question, it actually is, I was aware of a lot of investment options back in school as well. Probably because my parents I come from a corporate household where the morning starts with the newspaper, Economic Times newspaper. So I was aware of it, but it was only events I was in college where I was first exposed to how actually investments make economies and make and move the world basically. So that was when I was very keen on investing back then. But and some there was something new that was going on. That was called mutual funds. So while they have been around since the early 2000s, the real when you saw this, we started seeing the advertisements focused on this in around 2016, 2017. So that is also what got me intrigued. And the idea that you can minimize your risk by investing in a wide variety of funds in one fund which has a lot of equities in it. That got me enamored, and that's when I made my first investment of, I think it was 15,000 rupees back then. I borrowed the money, yeah, but it worked pretty well for me. I did pick up seeing that once that money was already in the locked there. I started picking up other things to invest in, which followed by cryptocurrency and a few in-game items as well, digital
Interesting,
items.
interesting.
Yeah.
So, I think that's super interesting to me. But first thing I want to say kudos that you chose mutual fund as the first product. Um, Being young, I can understand how difficult it might be to sort of get drawn to all of these fancy, schemes that give you quick money and stuff like that. But you chose something that has stood the test of time, right? So that's
Yeah.
pretty amazing. And you spoke about diversification, which is such an important concept, and we'll go deeper into those. But you also mentioned cryptocurrencies and in-game currency. We
Yeah.
would love to understand more about those. Specifically, I think in the current Gen Z, young millennial context, we see so many investment options in front of us, right? So would love to understand what 19-year-old Abhilek, like what was going on in his brain when he saw all of these options in front of himself.
Yeah, so me personally, and also what I was going, the friends that I had back in the time, it these items were expensive and we didn't have a salary. So we had to kind of nudge our parents for this. Uh, but we and frankly, my parents just gave me the money. But what I did see was that I was playing the game. I was playing. To be more elaborate, it was a game called CSGo, where you can unbox virtual items which are rare, and because they're so rare, they're tradable. So people are willing to pay very, very heavy money for certain items. So based on the pattern of the item or the uniqueness of the item, you can constantly buy and sell these items. And the best thing about this is that cryptocurrency is the best way uh, to trade these items for real money, because of you avoiding all the conversion rates, the taxes. So yeah, that was pretty popular then. It was also easier for us back then. For example, I invested in one item that increased by price in 4 times in just 6 months. So,
Interesting.
so this is I mean, and if I were to look it up, I'm pretty sure it has gone even higher up now. So, these are some things that I think people, even Gen Z in general, are not aware of. Probably because a very, very niche amount of population is actually still the people are still skeptical about investing into in-game items per se. Uh, and but crypto is still popular, I think, with my generation especially. Right now, you're not seeing that much investment in crypto because the prices have skyrocketed a bit. But at the same time, I think that I mean it crypto when we were speaking back in the day, like 2000s ACC stock, everybody knows what happened with that. So if you look at those patterns, yeah, crypto shows those patterns, and it would be a good time to invest when it falls once again, maybe in the next couple of years.
Got it, got it. That's super interesting, and I'm learning so much myself, Counter-Strike, CSGO, as you said, is a game from my childhood as well, right? We grew up
Yeah,
playing that, but at that point, in-game sort of items and currency wasn't a thing, right? So super interesting to see how the gaming world has evolved as well, right? And
yeah,
one thing that you mentioned is that these items go up in price because they're rare, right? Which happens
yeah.
with so many things, especially in the affluent side of things. We know people have like watches, and they have like precious paintings.
Yeah,
There's even
yeah,
wine that's considered collectibles, and they grow in value. So
yeah,
this is, you can say, the young version of that, right? People can actually purchase
yeah,
these items and
yeah.
they grow in value over a period of time. So super interesting to me. We'll go deeper into each of these as we move along. But like, having gone through the experience of going through crypto, going through mutual funds, going through in-game items, where do you see, like, what role do you see each of these items playing in one's portfolio if they were to just start investing today?
Yeah. Again, I would actually add another caveat to this of equities in general. So mutual funds are definitely great, and I would still suggest people investing. Even my generation to invest maybe 50% of their portfolio in mutual funds right now. Uh, and the other balance 50% can be a mix of equities, the in-game items that I told you about, as well as cryptocurrency. But another cool thing about equities is that I learned from mutual fund myself is that you can see, like for example, a very, very high performing fund called the Quant Small Cap Fund. And it was under some controversy, I think, in the I think a year or two ago, but because it was doing so well. So a lot of people that I know actually went through and saw and studied the fund as to which industries were they investing in, and companies that they were investing in. They actually bought separate equities in those companies, and they did pretty well. So that is another strategy that people can use, and not just use these fund houses as to work for you, but you can also take an aspect of these fund houses and you can start investing yourself. Uh, and I wanted to touch upon a tangent about the in-game thing because people don't know about it. So it is like, as you said, it's like wine or a watch. So when you see an expensive watch like a Tag Heuer or a Hublot, you see a superstar or some Hollywood star wearing the watch, and you say, oh, okay, I want it. So similarly, with these game items, you have millionaires that are at the age of 20 to 23 in these events. They call it professional gaming events with multi-million dollar prize pools, sporting these items while they're playing, which creates an exponential desirability for these items.
Got it, got it. That's super interesting. And you've shared a lot of very important insights. So let's unpack some of them, right? I think one thing
Mhm.
you talked about is your own, I would say, asset allocation strategy, right? You try to keep at least
Yeah.
50% of your portfolio safer, right? The other 50% is the portfolio, part of your portfolio which you manage more actively. So that is direct
Yeah.
equities, that is things like crypto, that is in-game items that you purchase. But I think one thing I want to highlight as a financial advisor is that this choice of your asset allocation is very personal to you, right? Because I think
Yeah.
you're clearly someone that is young, that doesn't have too many liabilities, so you're able to take that risk.
Yes.
You're
Yeah.
adventurous, you want to grow your money quickly. But I think to each person, I think it's very, very specific in terms of what they should be doing. We typically, sort of as financial advisors, recommend that if you're someone that's interested in this, you could absolutely take higher risk, right? Because you're keen, so you study the market. You even take reference from mutual funds to see what they're doing to pick your
Yeah.
stock. So
Yeah.
that's great that you have the time and also the bandwidth to do that research yourself, right? But for a lot of young people that might not have as much time and bandwidth, what would you suggest they do?
I think the safest bet right now is 100% going into mutual fund because I have friends that work in consulting. They don't have times to pick up my calls, so I don't think they would have time to invest in few funds. But yeah, so but I would still suggest invest heavily into mutual funds to them. And one other popular thing that is coming right now is called copy trading. It's been around for ages, but I mean, a lot of people do that. Is uh, but if you don't even have a friend who's a reliable copy trader, I would suggest to completely diversify into mutual funds and increase. And with every bonus that you get, try to increase your lump sums. I mean, allocate a certain amount of your salary into lump sum, and increase your SIPs maybe by 10% every year at least. That's what my
Amazing.
recommendation would be here. Yeah.
No, that's, I think, great advice, right? And
Yeah.
10% is a great baseline to go with because, first of all, you're able to beat inflation with it. And second of
Yeah.
all, as your salary continues to increase, you are able to
Yeah.
set aside a higher percentage as well, right? So, some years
Yeah.
when you have a higher salary jump, you could do a higher increase as well.
Yeah. So the reason why I said 10% is because right now we are in an economic slump. I think the inflation right now, in even though the government it says it's around 6.8 to 7%, the real number in cities is like 10%. And a lot of salaries are not increasing, but you're still better off living at your previous, with a slight increment. You're still better off investing more. If you get a 7% increment and you increase your SIP by 10%, you still benefit more over the next couple of years with this move.
Absolutely,
Yeah.
absolutely. And I think this is very, very critical, and I totally agree
Yeah.
with you because you're kind of not just it's not just about growing your money, but it's about protecting your money first, right?
Yes. Yeah.
So if inflation is, real inflation that you talked about, which means things that everyday items that people need to purchase, right? Which is things like food. I think that's the biggest thing. Grocery, those
Yeah.
actually go up in price higher, right? So
Yeah.
I think that's great advice, and I think this is one very important takeaway that everyone should go with today, right? Amazing to hear
Yeah.
that. Now we'll go deeper into each of the asset classes that you've delved into, right? Because
Yeah.
I think equities being one of them, I think they have been sort of the go-to investment for generations. And I think it's
Yeah.
good reason why that is, right? But I think very few people understand the reason behind investing in equities because a lot of people while growing up were always told that hey, stock market is gambling, right? But I
Yeah.
think those
Yeah.
who have followed the market and those who understand how it works really know that's not the case, right? So I want to hear
Yeah.
your take on it and why do you think stocks and stock market has real value for yourself?
Yeah, for me as an individual, I've seen what you call I started I pretty invested pretty heavily in March of last year, and I got hit pretty bad when the market crashed in September. So before that, I was making strong gains. But even despite that fact, I would continue to advise people to invest a certain amount of portfolio in equities, because if you ignore the 1 or 2 year windows, and you start thinking long term, 5 years or even more, you're always bound to be profitable. It was an article sponsored by JP Morgan and Chase. So keeping the bias aside, I think that the article clearly mentioned that you're 90% more likely to make, if you put money in a dead stock right now, after 5 years, for that money to at least become double in 5 years. So yeah, so the research is out there. And back then, as you mentioned, people thought of it as gambling because there was not much evidence to go by. The government was not promoting it. Right now, the government was not promoting it, and then people start developing their own, start making their own assumptions. So right now, we are at a better stage. The government is taxing it more, but they're actively also getting people to engage in it. So with the new GST reforms that came in, we are also seeing that the consumer spending would increase. There are a lot of economic factors. Even right now, even the US, we are hoping that the new US deal with the deal with US goes through, which would cut our tariffs from, I think it's 50% to 15%. So these things can show clear signs that money, if you invest in equities today, you will gain, if not today, in the next 1 or 2 years for sure. So my message out there to anybody right now would be to invest, to continue investing in equities, but manage your risks.
Right, right. Absolutely, absolutely. And we'll definitely go deeper into how people can manage their risks, right? But I think a couple of things that you said make a lot of sense. That equity investing, especially if you're doing it with a longer term lens, you're more likely to win, right? You're more likely to make money there. But it's not just a matter of chance that we are saying this, right? I think what people need to understand is that when sort of markets rise, there can be two reasons. One is obviously, just the some news article came out, and then the market shoot
Yeah,
up or the market shoot down, right? But
yeah,
that's a short-term
yeah,
phenomena. What is happening
yeah,
in the longer term is real productivity growth, real increase
yeah,
in value created by these companies. So just like the
yeah,
watches become more valuable over time, but more
yeah.
importantly for companies, it's a measurable metric that we see that
Hmm.
measurably these companies are
Yeah,
getting more valuable, right? So that
yeah,
is how growth happens in an economy. One very important thing that you mentioned is that all the things that are happening in India, or with regards to you can say the global geopolitics, that makes us bullish
yeah,
on the Indian economy, right? So we are all bullish on the
yeah,
India story because of these reasons. But I think irrespective of when someone is starting off, dollar cost averaging or SIPs is one of the biggest hacks that someone could
yeah,
use to reduce their risks, right? So this is just one
yeah.
example of something that people could do. Tell me, more things that young people could do to reduce their risk in their overall portfolio.
Yeah, another cool thing that happened recently was that the gold price shot up. Everybody knows it shot up by 26% in relation with the I'm speaking in terms of USD right now. And I think that has gotten people like myself also. I mean, now people like us are thinking more closely about investing in commodities such as silver, oil, gold, because my generation did not we have always seen the economy going up. Even the 2000, when the 2008 crisis happened, we were still too young to understand anything. But post that, we have always seen a huge spike consistently. COVID happened, but still we did not feel much because we are still kids, to be honest. But yeah, but overall, we are still gone up. And for people like us, when we now enter jobs and are entering the corporate space, we are clearly seeing that we are vulnerable. I mean, our investments are vulnerable. We saw that we don't have the shield of our childhood that we had, our parents taking care of everything. We couldn't see it. So with this impact, with the global economic slump, uh, but the gold price going up, now people like me are actually thinking about investing more into commodities. So surely, I would suggest that to anybody trying to invest, to actively start looking at commodities as a good investment option. Maybe not now because the prices are high, but maybe sooner, maybe a little later into the future, is to generally think about diversifying your portfolio a bit into commodities.
Amazing, amazing. And that's great
Yeah,
advice. As financial advisors, we recommend that you should hold somewhere between 10 to 15% of your portfolio in these alternatives, right? And
yeah,
when I say alternatives, it could be gold, it could be silver. But as you said, the prices might be pretty high right now, right? So in these
yeah,
cases, we generally recommend doing a SIP approach. So instead of
yeah,
investing in gold or silver lump sum, you could do it on a monthly basis. So it doesn't matter if the prices are
yeah.
high or low, you continue to add a little bit of these into your portfolio every month, right?
I
I
agree.
think
Yeah,
I also want to talk about the other side because uh, we have so many people coming to us whenever gold starts shooting up. Like it's been happening in the last 2 months. People are like, oh, you know what? I just got a 10 lakh bonus. I want to take this entire thing and put it in gold, right? And we immediately tell these people, please don't do that, right?
yeah,
Because
yeah,
I think it's one of the biggest things that whenever something does super well, everyone wants to jump on the bandwagon.
yeah,
But actually, that's
yeah,
the riskiest time that you should do that, right? You
yeah,
should do it at a
yeah,
time when other people are not looking at it, right?
yeah, yeah,
So, but tell me more about when it comes to markets going ups and downs, and it's an emotional roller coaster for someone that
yeah.
actively monitors it. How do you keep your own emotions in check?
Yeah, I think that's a great question, and I was actually going to touch upon this. I feel that the market runs more on emotion than anything. If, Even if you look at the biggest FIIs investing into India, I mean, it just took, for example, Adani is a very, very popular example. It just took one article by Hindenburg to completely collapse Adani in a couple of weeks. So I think that I mean, emotion is definitely important, but it should not steer your decision. I think that for me as a personally as an investor, I saw the huge crash that happened last year sometime around September, and I personally was very heavily invested into Adani, but that is where the years of experience into investing into different things came in, and I said to myself that okay. I did not go all in. I still have food to eat tomorrow. I still have a house to live in tomorrow. I'll just keep my money on the side and just let it be. And surely and slowly but surely it did go up. So I had for example's sake, right now I had invested pretty heavily into a gold stock called It's called Deccan Gold. It shot up. It had gone down, I think 30%, but then it shot up after the economy recovered. So I think that patience is the biggest emotion that anyone should practice. And if you have if you think about it in such a way that this money is not, I'm going to keep it away, that helps you, that relieves you and alleviates you, thinking that okay, I still have time to recover this.
Right, right. Absolutely. So I think couple of very important points that you just touched upon, Abhilek. I think they're very crucial for everyone watching. So whenever you sort of talk about investing, always make sure that the money that you need in the near term, you don't invest that, right? Because in the near term, you don't know whether
Hmm.
the markets are going
Yeah,
to go up or down. So you should have your emergency funds in place. You should have enough cash to take care of your shorter term obligations and goals, right? Only money that you know you don't need for the next 3 to 4 years, you can take risk with that, right? So you can invest that in the markets. That's great. I want to also talk about one important cautionary fact, right? So you talked about the fact that when companies are beaten up or when they are low, it might be good time to sort of identify opportunities there. But I would also say that you should do that with a word of caution because you also
yeah,
don't want to catch a falling knife, right? So sometimes when a
yeah,
company is down, it could be that the reason for it is real, and you should maybe avoid that company. So in Adani's case,
yeah,
the Hindenburg report, it ended up being just an allegation, which
yeah,
SEBI has now said that it's not true, right? After investigations.
yeah,
But if, let's say,
yeah,
SEBI investigated and found out that the report findings were true, then it could have been the other way as well, right?
yeah,
So I think
yeah,
that's the word of
yeah,
caution, which is very important to make sure you
yeah,
deep dive and ensure that you've studied what is going on before going into
yeah,
it, right? Would love to
yeah.
understand your take on it and how do you do it yourself? Like, is this something that you do when you study these companies that you think you're getting at a value?
I think that for me, I prefer going into things that I know. I would invest in things that I genuinely know. So, for example, I work in the automotive industry, so I know that what is the projection for the future a bit. So I would be more inclined to invest into consumables of our industry, such as engine oil or tires uh, uh, or basically spare parts produced by other manufacturers. So, and also, we also know a lot of foreign players are coming in. There are agreements, global trade agreements happening. So, me personally, I would try to invest into those industries. And I have been over the past few years, but as you mentioned, there are some industries that people invest in which they're not aware of and they must study. So in that aspect, I've always been safe. I think I would mostly invest into large caps because I know with the Indian economy going up, these guys would be the principal drivers of the market in that case. And with the way things to be in the future as well, I think that large cap funds are still large cap stocks are still pretty good investments. And even that would be entering medium caps as well. Reason being that a lot of these big giants, such as JSW, Reliance, and a lot of these big companies are now diversifying themselves. They're starting opening. So, for example, JSW has come out with JSW paints in the last few years. There's even we know everybody knows how Geo is now even entering groceries and everything. So yeah, so when these companies shoot up their like release their IPOs, they start out very small, the equivalent to mid caps or small caps. So those are the stock and mid caps, and everybody in the market knows that mid caps and small caps are the ones to attack. And since these companies have the backing of their group company, I think they become really smart investment choices for the long run.
Got it. Got it.
Yeah,
No, amazing. And I think very important point that you made. Always stay invested in areas that you yourself are more familiar with. Either
yeah,
you work in that industry or you have a keen interest in that industry because you're more likely to
yeah,
make the right decision there as opposed to something that
yeah,
you're not familiar with, right? So I think to
yeah,
all the people watching, guys, like don't go into something completely unknown just because your friend told you, right? Make sure to do
yeah,
your own research and build your own
yeah,
conviction. And if you don't have time to do that, you can always work with experts out there, right?
yeah,
And even if you don't have time to find an expert and work with an expert, obviously you can come to Cashvisory. But if you don't, then you could just go simply do your risk profile assessment and invest into a basket of mutual funds, right? So uh, I
yeah,
would say there are sort of different levels of market involvement that you can choose based on the amount
sure,
of time and effort that you're able to put in, right? But it's
yeah,
amazing to hear Abhilek's thoughts on how he does it as someone who got interested in the market so early, right? So this is great. I think this is a good time, Abhilek, to segue into the other more spicy parts of your investment portfolio, right? So we're going to be
yeah,
talking about the crypto piece. We're going to be talking about the in-game gaming. Let's start with crypto, okay? Because I'll tell you my honest opinion of crypto first, right? Would love to hear your thoughts. And I'm telling you this
mm,
from the perspective of a 30-something-year-old millennial, right? Where I saw the crypto wave, and at that point, I was very skeptical. I was like, what is going on? This seems like a bit speculative in nature, right? Suddenly a coin has come and it's Bitcoin, and everyone's putting so much money in it. And sure enough, it kept shooting up. It's still shooting up. I know it's prone to high corrections, but now it's starting
mhm,
to even get institutional backing, right? But
mm,
for me personally, I am a pure play value investor, right? So I try to find the value in everything that I invest in. But crypto is
yeah.
something that baffles me still. I'm still not able to quantify the value, right? So help me understand how you think about it as a young person who adopted crypto from its early days. How did you look
Yeah.
at it, and how do you think about it now?
So when I started out, I was pretty close to all this. Uh, Quick disclaimer, I think I've almost liquidated my entire crypto portfolio. But I think
Right.
that cryptocurrency in general, when I started, there was something brand new for me, something that was not regulated immensely, and that is what made it attractive to younger people like us because it does away with a lot of the nuances such as taxes, commissions, and whatnot. Over the years, what I felt is that with Donald Trump, with Elon Musk coming up with his Dogecoin and all those other things happening, you don't want to invest in something that is dependent on a person. And that is where the risk part of me came in, where I started reducing my investments into cryptocurrency. And also, Indian government, it also depends on how the country that you are living in thinks of the currency. So right now, there are heavy taxes on cryptocurrency. I think it's 30% right now.
30%,
Uh,
yes.
yeah. For me, right now, I would not advise people to invest too much into crypto right now. Uh, Probably because of what our government thinks of it. But in other countries, such as I know a lot of CIS countries and Eastern European countries, where it's a very, very hot take, and people are actually living day to day and are millionaires in these countries because of cryptocurrency. So I think cryptocurrency in general is a great place, is a great way to invest in. It's just about where you are right now in the world. Uh, and especially for people in India, it is difficult right now to be a crypto trader. And as for the market of cryptocurrency is extremely volatile. It's more volatile than our regular equity markets because there's no such guideline. It is heavily it's dependent on and on not just geopolitics, but also extremely dependent on uh, the markets that are not under our control, such as the gray markets.
Right, absolutely. And Abhilek, that's something that's very important that you pointed out, that something that's not regulated, something that's
Yeah.
can be sort of manipulated by people can be super risky, right? So,
Yeah.
like less regulation might be a good thing in one way because decentralization, but at the same time, it can also be a bad thing because there can be
Yeah.
certain powerful actors who can manipulate, right? And
Yeah.
there have been so many crypto scams, there have been rug pulls and whatnot going on. So what we generally tell people is that if you're interested in crypto, do invest in crypto, but put a very small percentage of your portfolio and be mentally
Yeah.
prepared to lose it, right? If something were to go wrong. So
Yeah.
don't don't let your life's aspirations be built on your crypto investments, right? So even for me
Yeah.
personally, I keep less than 5% of my assets in crypto, and that's
Yeah.
more of hedging, right? To see if this
Yeah.
becomes something big 10 years later, then I have some
Yeah.
exposure, I have some skin in the game,
Yeah.
and that's where I would
Yeah.
like to keep it, right?
It is also difficult to liquidate crypto. It's not very easy.
Yeah.
So if you're investing in crypto, for example, if I have a normal equity or a mutual fund, I can just go to my bank account or my trading app and just trade it. But crypto is also complicated because I recently had the experience. I exited out of I liquidated some of my crypto for currency for cash, and I did it on an app called Binance. I think everybody knows what it is. But it was a pretty tedious process. I'm coming back and doing it after 3 years, and a lot has changed there. So even liquidating is very, very problematic. You need to remember your old email. There's no such authentication out there. You lose your wallet, you lose your wallet. There's not much that can be done about it. So even from that as from a security standpoint, it is dangerous. Uh, and I thought I'd touch upon that because even people just talk about the up and down, but you should be able to extract the money. It should come to your bank account because there's a lot of nuances of converting from, in the case of Bitcoin, you have to convert from Bitcoin to USDT, USDT to USD, USD to INR. Yeah, so it's a very hectic process. And the people out there, and me doing it personally, I did not receive much help from the app. I had to figure it out myself. So yeah, even
Right.
that's a challenge.
That's a very important thing that you highlighted, right? Because there's so many inefficiencies still out there that make this entire thing riskier. And losing wallets, you have no recourse, right? You can't go to your
Yeah,
local police station and tell them, "Hey, I lost my crypto wallet,"
exactly.
because they're not going to be able to
Exactly.
help you.
Exactly.
So
Yeah.
thank you for highlighting that. I think people needed to hear this as well, right? Now let's go to the most interesting thing that I've learned from you today, which is about the sort of in-game currency, and all the different sort of assets that you can build in the virtual world, right? Which keep going up in
Hmm.
value. So, like, is this something that you still hold? Are these sort of in-game skins? Can they be assets that you do coffee can investing with and hold for the next 10 years? So as compared to, if you were to compare it to, let's say, stocks, right? How should a person look
Yeah.
at these kind of investments?
I think I can speak very closely on my experiences. Unfortunately, I've completely liquidated my holdings. in in-game currency. But it is, as I mentioned, the complexity with the complexity of crypto. These items don't have that. These items don't have that restriction. I can literally trade my items for cash for US dollars right now. They
Right.
just the commission fees are higher, but you over the long course you've already made your money to pay that 5% commission fee. But the the biggest part that people think that people were worried about back then and even slightly now is that what if this game stops? Like for
Right.
example, they used to play Doom maybe 20 years ago, and it's nobody plays
Yep.
Doom anymore. Yeah. So, but as long as that is a big risk point. But what happened was they released a new game and they transferred everything from the previous game to the new game. So this is
Interesting.
another cycling thing that is happening where because the developer itself, in terms of CSGO, it's a company called Valve. If you know Steam, Steam is owned by Valve, basically. Valve made Steam.
Right.
And they and CSGO is not the only game. There are other games such as Dota 2, which is another popular game which also has in-game currency. So the developers themselves are aware of what the items in the game mean for people, and they're willing to they take everybody's their consumers' viewpoint into the games that they develop. Uh, the
Interesting.
only uh, the only problem here is that you can run into some scams like any internet activity. But if you're careful about it, it is very true. And as I mentioned earlier, there's some countries even in there's another game called RuneScape, which is a pretty popular game. It was pretty popular in the 90s and even is now. There is the if you know of the country of Venezuela, a significant portion
Yep.
of the economy depends on this game because they trade the in-game currency for cash. So
Interesting.
the in-game items are still what do you call it's something unorthodox, but people can think of this. But again, the learning curve for this for anybody investing in this is pretty steep. You've got